Hi, Alex here with Intuitive Code. Today I bring you one more case study, the case of Gap, which is a company that we included in the bundles together with other names. And the reason we included the Gap in the bundles a long time ago, it was for several reasons. To teach people how to invest in the markets by utilizing numerous lessons which I recorded, illustrating the utilization of investment rules. Therefore, not only to profit from the investment process in Gap, but also to learn how to invest utilizing Gap together with its peers, like the case of Abercrombie, that meanwhile rallied over 300%. What we accomplished here, it is unique, and therefore this is important because it gives a very high level of confidence to users, because they see it happening. That is to say, in other words, that everything that they had access, the information, the analytics, it materialized. And I'm referring to parameters as the worst case scenario. So I'm going to illustrate this by addressing a bit the investment process. This stock rallied to $30 plus for the reasons that I explained in 2020, 2021. Hundreds of companies, they rallied to bubble prices. And what we did, it was to downgrade the Gap to junk. So Gap crashed, and we refer to Gap worst case scenario as $7. This $7 as worst case scenario, it was there in the analytics for everyone to see, to utilize for months, and well before the stock got to $7. So once the stock got to $7, and this story is very much similar to the case of Carvana, once the stock crashed down to $7, we told people we quit selling short Gap. So instead of seeing whether the stock or the share price could continue moving lower, we decided in this particular case, we made a decision. You close the short position, you reverse to the long side. Again, similar to the case of Carvana. Okay? Single digits, almost or basically the same price, $7 in both cases. Okay, so everyone knows what happened in the case of Carvana, that rallied to $60 plus, rallied a blip, okay, because that stock, it was downgraded to junk at 370. This case, I recorded then lessons, and we called all these pivots. Okay, so what you see here, the crash down to 7, then a bounce to 15, then again a crash to $7. All this stuff here we made available in the service. So everyone, small investors or professionals, they had access to this stuff. Okay, so then what to expect going forward is simple, because people, they already have instructions, they can continue utilizing the analytics if they want. So in my case, what I did, it was to assume a long position, and I explained it, okay? I'm buying shares of Gap. I'm not going to do anything. I don't expect anything. I gave, the pivots, I'm not going to enter in details. And what happened once I announced in August that I sold many stocks and went short the stocks, the market plunged, those stocks, they crashed, and people, they had access to it, all of them free of charge. Yellow Corporation, VinFast, Wayfair, Rocco's, and plenty of them, okay? That you find 20 or more, Shita, Net Supply, new stocks published on the blog, 100% free. In this case, this stock proved to be extraordinarily resilient. Okay, so the stock didn't crash because he already crashed. So everyone knew that we have been very bullish. The case of Abercrombie, And this stock, it was a laggard compared to Abercrombie. So if you didn't profit from the rally in Abercrombie, almost 400%, which is not possible because we repeated the same, I believe, at least over 1,200 times the importance of participating in Abercrombie, a company that no one believed in. Here you have a similar example. So today this stock is $19. Okay? So Wall Street remained bearish, and meanwhile they were forced, pretty much like the case of Abercrombie, they were forced to double price targets. Okay? The case of Abercrombie, they already quadrupled price targets because they've been chasing the performance of the stock without knowing what they are doing, in fact. Okay? Here it has been the same. All right? So this is what we accomplished in the bundles. And, although people they had or can, invest in 10 or 20, for example, the Oracle AI has, or Intuitive one has even more stocks, they can choose 1, 2, 3, 4, 5, 10, or those that they feel more comfortable with, and to follow up and to utilize them to outperform in the markets, okay? Including professionals. This is what the competitive advantage that we brought to everyone, okay? And these are my comments. And you can ask anyone that participated or have been there. They are going to tell you exactly what I just told you, all right? So I've been here for over 3 decades explaining people how to invest in the markets. My objective, it has never been, we are the best, we know what is going to do, blah, blah, blah. No, my friends, you have here, okay? This is, just told you in minutes, the story about the gap. This is the reality. And if I compare this to everyone else that has been discussing, for example, how to invest in gap, we did everything, others 5 or 10% at most. Okay? Thank you.